Now, markets have been on a roller coaster ride in 2020. Earlier this year, there was panic selling between mid-February and mid-March when the lockdown began. The JSE All-Share Index plunged by more than 30%. Then there was a remarkable recovery of many of those losses. But what does it all mean for the firms that manage our investments and our pensions? Muitheri Wahome and Bouwer have written a new report that looks at the asset management industry post-COVID-19. Wahome is the former chief client officer at Alexander Forbes Investment. She's now an independent financial professional. She joins us on the line. Ms. Wahome, thank you very much. Before we look at the investment management firms, would you agree it's been crazy on the markets this year?
Good evening, Francis. Good evening, listeners. It has been a market that, when you listen to commentators, filled with superlatives, unprecedented, and all sorts of words that have been used again and again. And you've seen a record sell-off and a very sharp recovery that has caught everyone flat-footed. So you're right. And as a result, the authorities have had to act quickly. And to their credit, they have, in many cases, left no stone unturned in trying to provide some sort of support in what really is fairly difficult times with challenges that perhaps have not been seen before, because they're not only economic challenges but health challenges as well.
Yeah. When you look at now investment management firms, in your report you talk about Electus fund managers that threw in the towel in March. That was under Ned Group Investments. So maybe there are casualties already. But what's the overall picture? Because have there been gains? I mean, with so much buying and selling, aren't there revenues in that for some of these firms?
Definitely. In every situation, there's always some who will benefit, some winners and some losers. And if you look at, for example, stockbroking firms, all over the world, there's been an increase of individual investors taking advantage of some of the fall in prices that you've seen. And whether it's in South Africa, in the US, you've seen a lot more individual investors jumping into the market, taking advantage of falling prices in some cases. That's not everybody. And one of the other things that we hear when we talk to asset managers is others who are a little bit more risk averse, maybe because the monies that they had in the market was for some project they had in the short term. Those have been selling and putting their money into cash.
Yeah, and what a pity if they did that when the market was down 30% and now it's up again. You also talk about how the big firms differ from the smaller firms and the boutique hedge funds. They've been impacted differently. Are the smaller firms in danger of closing?
There's definitely different strains that each kind of firm will face. So smaller firms don't have the scale to be able to handle rising costs, for example, that they may be experiencing at a time like this. You hear a lot about government regulation around social distancing, deep cleaning of offices, and suddenly there are all these costs that perhaps had not been budgeted for. At the same time, there might be savings because there is less travel. But there's no doubt that smaller firms will feel greater pressure at times like this, because when their assets fall, then their revenues fall. And if their costs are rising, it does mean that their margins are being squeezed. So it's definitely a difficult time when everybody's trying to conserve some cash.
I mean, what sort of job losses are you expecting? Could those be avoided because of the recent flurry of activity that we were talking about, and some of the gains on the market?
I think when I talk to various heads of businesses, it's clear that everybody wants to try and conserve jobs where they can. So, it's not often the first thing that they think of, but there are cases where there's really nothing more that a company can do to be able to survive, but to cut some of the costs. And unfortunately, and very sadly, that sometimes means that some of the employees might have to lose their jobs.
Finally, very quickly, your report says over the next year or year and a half, there's likely to be a flight to quality. What does that mean?
That means that at times like this, investors also start to get nervous and they start to look for firms that have that might, in their minds, be more stable, that might survive for the long term. And also it's a part of, it's an expression of the kind of attention that they're getting. And you can well imagine at times like this, investors have many questions to ask of asset managers. So what is the responsiveness? Do they see these managers having the kind of responsiveness and engaging with them on the issues that are worrying them? And if they do that confidently and our companies that still are showing good performance, then they will stay. And that's what we mean by the flight to quality.
All right, thank you. Looking at the asset management industry post-COVID-19, that was independent financial professional Muitheri Wahome.